The system of national accounts, or SNA, if properly done, is a highly useful tool for economic analysis and policy recommendations. It can provide insights into the level of economic activity, its fluctuations from year to year, the amount of savings and investment, and the limitation on society's ability to consume based on current income, factor productivity, industrial structure, comparative performance, and many, many other factors. However, the concept of welfare pursued by sustainable development experts extends beyond monetary measure of income, as we discussed in the previous videos. It encompasses various subjective aspects of well-being that go beyond traditional market transactions or monetary measurements, particularly for those individuals whose basic material needs have been met. And this realization has been acknowledged by economists and environmentalists for quite some time, leading to the development of a new scientific field within the accounting system known as environmental economic accounting. But this achievement was the result of continuous efforts to construct and refine its theory and practice, gain national approval, and ultimately achieve international recognition. In this video, we will delve into the history of the creation of environmental economic accounting. So let's get started. Environmental accounting, also known as environmental economic accounting, is a field that integrates economic and environmental data within a common framework. It essentially extends traditional national accounting to incorporate the environment's contributions to the economy and the economy's impact on the environment. This is an important consideration as traditional system of national accounts frameworks do not account for natural resource depletion or environmental degradation in the measures of national income. And as a result, income can be overstated when natural assets are consumed or depleted, resulting in a discrepancy between reported income and the true state of environment. Environmental economic accounting evolved during the late 20th and early 21st centuries in response to a growing recognition that sustainable development and well-being require integrated measurement of economic performance and environmental stewardship. Early national initiatives were implemented by the National Statistical Office in Norway, which introduced natural resource accounts in 1974. The Central Bureau of Statistics, now known as Statistics Norway, took over the system in 1978 to track physical and monetary data on nations' environmental assets. Similarly, the Netherlands introduced the National Accounting Matrix, including environmental accounts, between 1989 and 1991. And this analytical framework integrates monetary economic data with physical environmental data, allowing for a direct comparison between economic performance and environmental pressures using the exact same industrial classifications. These early initiatives in both Norway and Netherlands were influenced by the Limits to Growth report and growing environmental movements, and they set the foundations for later international frameworks. In the late 80s and early 90s, the United Nations Environmental Programme, UNEP, and the World Bank held a series of workshops to explore the integration of natural resources into the SNA. These workshops concluded that methods had advanced enough already to successfully link environmental data with core economic accounts. And this consensus was further supported by the United Nations Conference of Environment and Development, UNCED, in 1992, which explicitly called for the establishment of systems for integrated environmental and economic accounting in Chapter 8 of its Agenda 21. This gave political momentum for global legitimacy to environmental economic accounting initiatives. In 1993, the system of national accounts formally included guidelines for satellite accounting, which with a full chapter devoted to environmental economic accounts. It allowed for the expansion of analytical capacity without altering the central system of national account structure. In the same year, the first United Nations System of Environmental Accounting, or SEEA, interim handbook was published. It provided a conceptual framework and compiled various methodologies and approaches for integrating the environment into the accounting, but left some concepts unresolved due to the ongoing methodological debates. And in 1994, the London Group of Environmental Accounting was established under the United Nations Statistical Commission to refine these methodologies and share country experiences in compiling environmental accounts. This group, consisting of national and international experts, became key forum for advancing best practices and providing technical guidance in the field. In 1997, the United Nations Statistical Commission tasked the London Group and the United Nations Statistical Division, UNSD, with revising the 1993 system of environmental economic accounting to incorporate lessons from country experiences and resolve all the remaining conceptual issues. This launched a comprehensive revision process through broad consultations between 1997 and 2002, resulting in a more robust and widely accepted framework. In 2001, the United Nations Statistical Division and the United Nations Environment Programme released the final operational manual, which provided a step-by-step guidance to countries on implementing specific modules of environmental accounts and illustrating policy applications. This practical manual helped standardize the compilation of such accounts. A major multi-agency revision of system of environmental accounting was then carried out by the United Nations, the International Monetary Fund, the Organization of Economic Cooperation and Development, OECD, European Commission, and the World Bank, significantly expanding its scope and achieving consensus. The result was the jointly published System of Environmental Economic Accounting, SEEA 2003, Handbook of National Accounting, Integrated Environmental and Economic Accounting, representing a broad international agreement on concepts and classifications of environmental economic accounting. In 2005, the United Nations Committee of Experts on Environmental Economic Accounting, UNCEEA, was formed with the mission to mainstream environmental economic accounting globally and oversee its development. Its mandates included elevating the system to an international statistical standard by 2010, coordinating implementation in countries, and advancing methodological research. And the United Nations Statistical Division was designated as the committee's secretariat. In 2006, a specialized system of environmental economic accounting extensions, fishery and water, or SEEA-FW, was jointly published by the United Nations Statistical Division and the Food and Agriculture Organization, providing guidance on natural resource accounting for fisheries and aquaculture. In 2007, the System of Environmental Economic Accounting for Water, SEEAW, was presented to the United Nations Statistical Commission, and Part 1 of this system was considered for adoption as statistical standard for water resources accounting globally. These extensions applied the System of Environmental Economic Accounting concepts to specific resource sectors, refining methodologies for particular environmental domains. In 2012, the System of Environmental Economic Accounting Central Framework, or SEEA 2012 CF, was adopted as an international statistical standard by the United Nations Statistical Commission, fulfilling the objective of the United Nations Committee of Experts to establish an international statistical standard for environmental economic accounting. This marked a major milestone as the central framework codified best practice methods for incorporating environmental assets, resources flows, and related economic transactions into national accounts in a comparable and modular way. This central framework was jointly released by the United Nations, European Commission, Food and Agriculture Organization, the Organization of Economic Cooperation and Development, the International Monetary Fund, and the World Bank, reflecting broad international support. Recognizing that ecosystems and their services were not fully covered in the central framework, which focused on individual environmental assets like water and energy, the System of Environmental Economic Accounting Experimental Ecosystem Accounting Guidelines, or SEEA, EEA, were released and welcomed by the United Nations Statistical Commission in 2013. This was the first international effort to extend national accounts to measure ecosystems, encompassing the capacity and condition of ecosystems and the flow of ecosystem services to the economy. While not yet a standard at that stage, experimental ecosystem accounting guidelines provided a complementary framework for countries to pilot ecosystem accounting in physical and monetary terms. In 2011, the European Union passed Regulation number 691/2011, making several models of environmental economic accounting mandatory for all EU member states, institutionalizing the environmental accounting at the regional level. The World Bank, in collaboration with national governments, launched the Wealth Accounting and Valuation of Ecosystem Services Global Partnership, or WAVES, between the years 2012 and 2019 to assist developing countries in implementing natural capital accounting based on the System of Environmental Economic Accounting, highlighting the integration of nature into development planning. These efforts by international organizations facilitated wider country-level adoption of environmental accounting practices. The United Nations Committee of Experts on Environmental Economic Accounting initiated a multi-year revision of the experimental ecosystem accounting framework that we mentioned before in 2017, engaging global experts from statistical, ecological, geospatial, and economic fields. The culmination was the adoption of the ecosystem accounting as an international statistical standard by the United Nations Statistical Commission in March 2021. This historical step expanded the scope of official environmental economic accounting to fully include ecosystems and their service values, enabling nations to account for degradation or enhancement of ecosystem assets in their national balance sheets. Ecosystem accounting as an integrated part of the environmental economic accounting complements the central framework, providing a comprehensive picture of the environment-economy relationship, reflecting the biodiversity and ecosystem health in economic terms. Since then, the system of environmental economic accounting became a mature system to function in both national and international scales.